All right, what's up, everybody? Good morning and happy Monday. Let's do a quick audio check, and we'll get jumping in here. I'm a little bit under the weather, so I'm going to keep this short and sweet. Believe me, I do love to come on here and run the scans and look at the squeezes and all the pretty stuff out there. I think right now more so you just focus on the indexes and you focus on VIX, because that's pretty much, I think, going to set the tone for the Teslas, the Amazons, the semiconductors, etc. for the next handful of weeks here. So I'm going to give you two levels. Oh, man, I sound awful. In terms of key support, though, for me, key support continues to be that weekly 21 EMA. So I think you want to mark that up there for your QQQ, for your S&P. In terms of some resistance, pretty clearly, we're just kind of banging our heads off of that. Yeah, call it 4,600. That's a pretty good round number there. So that's your bigger picture support. I think we're probably going to get a little bounce here. If that doesn't take you back above the 21 EMA, I think we're going to continue to trade in this, $100 box here until we get a bit more of a directional move. So let me see, do I have my other chart open? Yeah. So look at it from this perspective. Let me get the weekly chart. And we can start off with the Qs. So my whole mindset is your weekly chart's going to build energy at the 21. It's going to take you to about 2 to 3 ATR. And then at some point, you're always going to pull back to the 21. And you got a little bit more to go here for the Qs. But for conversation's sake, we come down to the 21. We hold support. It's just one piece of the puzzle here. We're going to want to see volatility die down. But then on your lower time frames here, you're going to want to see that shift of momentum back towards the upside. So if you look at this little chart here, you got 10x bars on the monthly chart, weekly, all the way down to the 5-minute. So bigger picture thinking, right? And the weekly chart is a bigger picture chart. You still have green 10x bars, which means there's bullish momentum. But if we're looking for support and we're looking for a quick bounce, so your whole mindset is we're pulling back to the 21. I'm going to buy the dip back towards the highs we go. You need a bit more than this. So if the 10x bars are red, it's bearish momentum. And if they're yellow, it's just a bit more neutral. So you might be pulling back to support. But from a daily chart down to a 5-minute chart, there's no bullish momentum. So you need support. Then you need the shift in momentum. Just keep in mind, if we end up, if we do end up holding here, we might chop for another 2 to 3 to 4 weeks. So you need that shift of momentum. Look how long it took your daily chart to give you that shift in momentum. If you look at the histogram down here. So the pullback into the weekly 21, if that holds up, typically as a swing trader, it's where you're going to make your most money. It's one of your better buy the dip opportunities in a big, strong uptrend. I'd be a bit patient here about loading the boat on longs with the assumption this trend continues until you start to get a shift in momentum. And then with the volatility index here, I'd like to see that back down towards like 20. So those are a few things I think we're looking for here before we kind of blindly buy this dip. From a bear's perspective, I think if you're looking to short the market, well, you're looking for volatility at some point to continue to push higher here. And then in terms of structure of the market, I think shorting gets much easier as far as a swing trade goes. If we can break the weekly 21, and then if you're short, oh, there's a dog. But then if you're short, you're looking for that supportive momentum. Right? So you don't want to see any green 10x bars. You want nothing but red 10x bars. It's pretty much what I'm waiting for at this point. I'm never one to get shaken out of positions, on this flush. But I'm also going to be the first one to try to flip short if we do start to break structure and really break down. In the meantime, I'm pretty much just going to sit back and watch the show unfold. Here's my whole mindset right now. And again, if this all breaks down, I got to change my mindset. But my mindset currently is that if a friend of mine called me and said, hey, Now I got one of the strongest weekly uptrends in the market. It's pulling back to the 21 EMA. It's in a squeeze. It has stacked DMAs and green 10x bars. So if a buddy of mine calls me and explains the structure and the trend and everything about this weekly squeeze, my last thought process is going to be to short it. That's my mindset right now. Tuning out all the emotion of the news, if I'm just looking at the weekly chart in front of me, I never short anything that's pulled back to the buy zone in a squeeze with positively stacked DMAs. I'm going to wait until momentum shifts in my favor to get long, but I'm not trying to short this right here. And a big part of that is, I'm looking for trades here that last, until January, February. In the interim, I think there's going to be a lot of day tradable opportunities. So you bounce back up towards some resistance here. If we can't get back above the 21, I think there's an easy short for a day trade and overnight kind of trade. But being a bit more of a swing trader here, just going to kind of sit back and watch how things unfold. But that's a combination you're looking for in the event that's your current mindset. You're trying to buy this dip. It's one thing to come back to support. A lot of times you're going to sit here for 2, 3, 4 weeks before you can get that shift of momentum. But until this changes, I got to look at it as a weekly squeeze at the 21 with stacked DMAs. Never something I want to short for a swing trade. So that's pretty much the focus here. And again, I don't even really think we need to look at the Amazons or the Teslas or anything, because here's the reality of it. Say from a bearish perspective, volatility continues to spike. We break the weekly 21. You start to fade lower down to -1, -2. Down goes everything. So your Amazon weekly squeeze probably won't matter. The daily squeeze in the semiconductors probably doesn't matter. If this weekly trend breaks structure and shifts towards -1, -2, down goes everything. That's why I think you should focus here. From a bullish perspective, everything we discussed this morning unfolds. We find support. We weekly squeeze for a couple of weeks, but then you get green 10x bars on a 5-minute, 15-minute, right? All the way up to the daily chart. Volatility's died down. At that point, the index is gearing up for a push back to a new high, in my opinion. So your Amazons, your Teslas, your Googles, under that circumstance, are all going to go higher. So hopefully you got that understanding right now. As goes the market's going to go typically everything on your watch list. So be a little bit patient. But to me, the weekly squeeze still paints a really bullish picture. I'm never going to short a squeeze at the 21 with green 10x bars and stacked DMAs. That's just not my trade for a swing trade. So we'll see how things unfold here. Obviously, your daily charts, right, it's a little bit iffy. So if you look back here, this is September, October. Daily chart gets pretty ugly. Though all that was your dip to the weekly 21. Here's the key, though. When do you finally get the continuation of your trend off of your weekly 21? Your daily chart starts to shift momentum. Histogram goes from yellow to light blue. And then you're rocking and rolling there. So I think all a little bit too early here to have any kind of assumption that this trend has to continue. You've got no supportive momentum. Volatility is still crazy high. The only thing you're working on is that you pulled back towards your 21 EMA and didn't blow through it for a week. I want a little bit more to work with here, so I'm going to keep on being patient. But that's about all I got for y'all here this morning, guys. I can answer some questions. I'll take a look here in the chat. But for now, we're still holding our long positions. Oh, excuse me. We'll see if we have to trade around them. If you got to dance, we'll dance. Alexander, I couldn't even tell you the settings in the 10x bars. To be honest with you, I'm just very much, hey, show me the pretty colors. If yellow is neutral, if green is bullish and yellow and red is bearish, it's about all I gotta know. So I'm not too sure what the exact ADX and all the good stuff in there is. Now, the reason being is it's only a piece of my puzzle. If I was going to make trades just solely based on the 10x bars, I'd probably try to get a better sense of the pretty colors. Yeah, I got you, brother. Jonathan, we got Lucid. So we're pulling back to, call it $40. Yeah, pretty good dip there. See if it comes down into 50. I think you got Tesla down this morning too. Not as much. Tesla's down a couple of bucks here. You know, Lucid is one I've been waiting for a pullback in. And of course, this could all change here this week. But heading into the week at the very least, great looking structure to the brand new daily squeeze. Yeah, look at the momentum coming in though. So we'll have to see how it holds up here. Yeah, I would like to buy it at some point, but I think one will take day by day here. I'd look for the 50 to hold for now, though. That's kind of the first place I think it can prove itself if we're already coming down here towards 40. Okay, SEC investigation. Well, that's always a good time. Hey, good morning, Eli. I'm sure I'll be seeing more of you today. Oh, yeah, this looks great. Looks really good. Daily squeeze, stacked DMAs. Yeah, nothing bad to say about this one, Eli. And you got a weekly squeeze, so awesome. So you get squeezes, you got good looking stuff here. More importantly, though, look what it's done in the midst of all the volatility. It's held up really, really well. So if you get your volatility dying down and your indexes, they try to get something going back towards the upside, these are the first kinds of things I think take lift off here. Because they held up so well without throughout the volatility, they should be gearing up for a pretty good push without the volatility. And just the semiconductors as a general statement, definitely one of the spots I want to get some cash to work. But remember what we talked about here, where if everything breaks down, semiconductors are going to be included. But compare the structure here to, the industrials, to pretty much everything. This looks really bullish. If everything cools off here, I think one of the first spots, and probably our leadership for the next leg higher. So I'm definitely interested here. You got NVIDIA. It looks great. AMD's back at the buy zone. Yeah, but your NXPI, though, pretty clean. Pretty clean there. Hey, good morning, Roseville. So for PG here, at least as of right now, just doesn't care what's going on out there in the market. Got your initial flush, but they're picking it right back up. Yeah, I was going to say 150 is kind of your key number here. Daily squeeze looks pretty sharp. You've got weekly, 3-day, daily. Yeah, you got a lot of squeezes here. But if you're looking for these opportunities to the upside, for all of us right now, that should be a major note. You compare this to a lot of other names out there. This holds up really good. You go into Friday at an all-time high. Looking like you're gearing up for a bit more. So Proctor looks really solid. Another good example, so Roseville, you're doing a good job of narrowing down that focus to the clean stuff out there. And ABT. Yeah, all good examples of things that have the characteristics of the setups I think a lot of us look to trade, but they get extra, kudos right now because they're holding up and looking pretty good here in the face of all that ugliness. right. Gabe, if you're referring to down here, Gabe, that's the squeeze. The dotted line, if that's what you're referring to, that's the squeeze. Good morning there. What's up, Caden? Uh, AMC. Good old AMC. So with my trading, right, I have rules that just make all my decisions for me. So one of my rules is, and mind you, my rules they keep me out of like 90% of the things out there. So I could trade way more often. Excuse me, but with my rules, if something is under the weekly 21 EMA, I'm only looking to short bounces. And so as you start to break structure here, now here's where it gets interesting because I'm looking to short a bounce because I think from a bigger picture perspective and a momentum perspective, everything is starting to trend towards the downside here. However, if I'm looking to short a bounce and you're looking to buy calls, we're kind of looking for the same thing here. Right? If I can only short it up here at the 21 EMA, well, there's the bounce you're looking for if you're looking to buy calls. So you're extended to the downside, but the key here is can you get that shift of momentum? And this is why I like I'll detach this right. Let's see. This is why I like the 10x bars because we're extended, but you're not going to get that oversold bounce back to your 8, back to your 21, back to your 21 EMA until that bearish momentum starts to die down. So with red 10x bars, it's just bearish momentum. 4-hour, 2-hour, 60-minute, 30-minute, etc. So you're looking for that momentum to at least start to cool down a little bit. You're looking for more yellow 10x bars. Then you're looking for green 10x bars. And if you don't have the 10x bars, just focus on the histogram. So you can see the daily histogram is still pointing to the downside. So there's no exhaustion there just yet. You could take it down to a 5-minute. In this Caden, this is pretty much what you're looking for across a lot of different time frames. It's that bearish momentum that's dragging it lower. But then you're looking for that bearish momentum to cool off just a little bit. Then you're looking for fresh bullish momentum. That kind of shift there can start to hit across a few different time frames. Then it sets your daily chart up for that bounce back to the upside. That's what I'd look for there. And what could be so nice about those plays, even though I don't do them, is these calls have gotten dirt cheap here. Right? So as it's extended to the downside, everyone's trying to short it. If you can get some supported momentum, those calls are pretty cheap. Catch a solid bounce there. You're rocking with a pretty good return. Okay, Gabe. That's the 50-period simple moving average. The orange dotted line there, that's the 50. So if you look at the Q-tips here, giving the 50 a little smooch this morning. Those Qs. All right, guys, how we doing on time here? I got the early options room session. Always look forward to it, but it's going to be a long one today. So Jason, in terms of Tesla, and good morning to you. Let's see. All right, excuse me. Yeah, I think you're looking for your 50 to hold at this point, pretty much. Then we start to take it from there. I think what we're seeing in this market is a lot of these, the index is just a lot of the stronger trends as of late. You're getting that pullback to the weekly 21. Now, I'm not saying you're going to get that from Tesla. What I am saying, though, is if we can't hold that daily 50, and this gets a little bit uglier, down here is where I'm looking to build a position. Now, I'm not jumping in inside of a bullish daily squeeze, but what I am doing is getting the first pullback since this weekly squeeze fired into key support. And if I can take that down here at -3 ATR, there's going to be some really good premium. We'll probably be able to go out to like 750, 700 with our short strikes. Some really good cushion. Or I think you could hold the 50 here, and it's just a daily squeeze going back and forth. Major thing to keep in mind here: big average true range. So it would be nothing for Tesla to be down 40, 50 bucks this morning. For the same reason, if it goes up 50, 60 bucks this morning, nothing to really get excited about. So I think if you hold the 50 here, this is just a lot of chop consolidation. You break it, maybe you're going to get the good old gap fill down to the weekly 21. So for a lot of things right now, it kind of seems to be a self-fulfilling prophecy, so to say. Coming back to the weekly mean, which I think is a spot you want to start to look at a couple potential longs. So we'll see how Tesla does here today. Yeah, Angela, I like that idea of potentially getting a hedge on here. Here's what I would wait for. And of course, we could just flush this morning, right? One of the frustrating things I think for a lot of us here about hedging our longs in this market is because we do continue to find support at the weekly 21. Myself included, but by the time a lot of us are thinking about hedging, we're doing it down here at weekly support. Then a couple of weeks later, the hedges are just digging into the profits on our long positions. And in no way does that say we have to hold up here at the weekly 21 EMA again. But what I do think I try to do here, Angela, is get yourself a hedge in a fashion where if the market rips back towards all-time highs, that hedge is the least of your concerns. So what I would try to do is structure something here where you can go low risk, high reward on your hedge. So you're not tying up a lot of capital in it, excuse me, but even better if the market just rallies here, your hedge goes to zero, you could kind of care less about it. So for example, I would see if these markets could bounce back towards that 4,600 level. Now, say we get back above the 21 EMA and we hold. At that point, I would actually hold off on the hedge because this market's got a pretty good knack of roping everybody into the short side and then just quickly kind of fixing everything here. But if we do get a decent bounce, doesn't look like we're going to get back above the 21, then what I would do is, Angela, this is just an example of what you could do. But, I might come down here and do, in the money call credit spread, selling the 44.70 calls. Pretty much place on a bet here that in 15 days, we're going to be trading under 44.70. What's nice about that is a lot of times if you do that into a good bounce, you can risk 1% to make like 4 or 5%. Something along those lines, because now if the market rallies and you got a 1% hedge on, you're making money as your long positions do their job. But if we actually do break down here, it could be an out-the-money debit spread. It could be an in-the-money call credit spread. But if you're working a hedge that's low risk but high reward, that I think is the ideal combo, being that we're near with the weekly 21, which I just think even if it does crack, could be a hard level to crack. If we were up here at 3 ATR, then I think we'd do the out-the-money call credit spread. So hopefully that makes sense. But listen, guys, I got to cut you off here, unfortunately. I got to go gargle some salt water, and then I got to jump into the options room. But hope I've given you a few things to take into consideration here. I'm not so much trying to come to the market with a bullish agenda, a bearish agenda. More so my agenda is just kind of look at the structure of the trend that brought us here, and then take it day by day. But a weekly squeeze with stacked DMAs at the buy zone, in terms of swing trades, it's typically the last thing I want to short. But I hope I've given you a few things to think about here. Wish you the best of luck this week, and I will see you again on Wednesday morning. For those of you in the options room, I'll see you animals in about 10 minutes or so.